Hello and welcome to this episode of the Legacy Lab podcast. I'm your host, Michael Kramer, and today I've got a special guest, Grant Wilbeck, on the show with me today, and we're going to talk insurance stuff, which is super exciting, I know. The problem is that insurance is one of the things that we often take for granted. You know, it's something that we think we don't need until we need it, and if we don't plan ahead, we can get ourselves in some serious trouble. So I wanted to bring Grant in to break down the basics of auto, home, and commercial, as well as some life insurance for investors. It's a little bit outside of maybe real estate specific, but if you're going to protect yourself, you got to protect the whole self, not just the assets that you own. And so Grant's going to help with that. Let's start, Grant, with your bio. I want to give these folks a little bit of an idea of who you are. So Grant's an insurance agent here in Omaha. He's been in the business for 3 years, and he works for Shelter Insurance, specializing in home, auto, and life and business insurance. He is proud to be named as the 2024 Agent of the Year in his district. Dude, that's pretty cool.
Yeah, yep.
Big deal. He's kind of a big deal, you guys. If you don't know that, check him out. He qualified for Shelter Insurance Conference of Champions, which goes to the top 165 agents in the company, and currently holds the Rising Star record. Dude, when were you going to tell me all this stuff?
Hey,
I knew you were good, but holy buckets. Here we go.
Hey, yep.
Rising Star record in the Great Plains, which is Nebraska and Kansas with Shelter. Beyond insurance, Grant's passionate about real estate investing, hence why he's on the show.
Yep.
He owns 3 rental properties in Omaha and Lincoln. He's also involved in some really cool acronyms that are about leadership.
NAFA. NAFA Omaha, National Association of Insurance Financial Advisors.
There you go.
That is what that means.
Thank you for that.
Absolutely.
And he really prides himself on great customer service. He's always straightforward and honest. I've known him to be that way. It's the reason I have him on here. One of the things that I really want to be careful with and bringing a guest on is somebody that I know I can count on and trust. And Grant's somebody that has quickly earned my trust. And he's somebody that's dedicated to helping you grow your business and helping you protect what matters most. Grant Wilbeck, welcome to the show.
Absolutely. Thank you. Happy to be here. Excited to see what the show's about. And yeah, hopefully I can provide a little insight to some of the listeners today. I know, like Mike said, insurance is not always sexy, but hopefully we provide some information that can at least be, some food for thought and things like that for you.
Absolutely.
Out there, so.
I've got some hard questions for you.
Yeah, well,
so I'll
try to answer them as best I can,
So tell me a little bit about your backstory. How did you get involved in insurance, and how did you decide that was kind of your purpose or your mission?
Yeah, so it's kind of a funny story. So I never really, in college, never really thought I would quite get into insurance. I was always interested in having a customer base, having a client base. I always thought I'd be more of like a financial advisor type of role. I always had that interest for real estate as well. So I thought maybe I'd go somewhere in real estate. I did reach out to a couple actually real estate firms and things like that I knew in college, and just ended up going the insurance route mostly just because, like I said, loved the thought of having a client base. And then most of all, actually had an old neighbor that lived next to my parents' house there. And he was a successful agent in Omaha with Farm Bureau. So his name's Jason Smith. Give him a little shout out in case he's listening.
There you go.
But yeah, great mentor to me. So he actually had reached out to me to get into the business with him. And I thought it was a great opportunity. And so started with him over at Farm Bureau as kind of an sales associate for him. And just, he was a great mentor to me. I got my licenses. He taught me how to run a business. He taught me things to look for and things to do as an insurance agent, as far as, setting reviews with customers, reaching out around renewal dates, making sure everyone's aware, and he would explain coverages to me. So I fully understood, a lot of the basics of insurance in the first couple of years. So, got started with him, started from zero, and essentially built, my own little book of business within a book of business with him. And I was kind of like a mini agent, if you will, but I wasn't the real agent.
You were doing all the work.
I was doing a lot of the work. I was doing a lot of the sales. I was out there marketing, joining networking groups, starting networking groups, things like that, just getting my name out there. And really just started to fall in love with insurance, honestly. Started to fall in love with building up that client base, that book of business, people to take care of. I loved helping people. I loved explaining coverages to people so that they, were fully aware of the coverages they needed. versus the coverages they had.
Help them make educated decisions.
Exactly.
And,
Explain, what liability limits are, what an umbrella can do for you. The life insurance side I fell in love with, which not a lot of people say, but that's been one of the huge reasons I've found quick success in insurance is probably the life insurance side, being able to protect people's assets, being able to sit down with them and say, hey, you have this, and this, you've got 3 kids, if something happens to you, your family could really be in trouble.
Helping them close that gap.
Right.
To really be insured for
right.
After they're gone, their family's going to be taken care of.
Exactly. Yeah. So making sure if they're gone, their family's going to be taken care of exactly like you said, and their assets are all going to be protected. And so I really, really loved and enjoyed that. And so long story short, started with Farm Bureau. At the end of the day, I wanted to be my own business owner. I wanted to be my own agent. And with Shelter, it was just kind of the perfect storm. Shelter had reached out to me.
Pun intended.
Yeah, it was kind of, yeah, exactly. Yeah, perfect storm with Shelter. Yeah. But they had reached out to me to take over an agency that had opened. They were essentially referred over to me, and I was just at that time where I felt like I could do it by myself, and I was ready to take that.
Opportunity meets preparedness.
Yep, exactly.
A lot of people call that luck, but you had been doing a bunch of work to get ready for that.
Exactly, I'd been doing a bunch of work. The only reason I heard of the opportunity was because of all the networking I'd done. I'd gotten in touch with a lot of people.
That's awesome.
A lot of great people. And
so there's 2 things, Grant, that you're touching on that I want to draw out a little bit further for the listeners. The first is the idea of the mentor and the value that was. And then we'll come back and talk a little bit more about the networking and the community side of it. So tell me, first on the mentor side, how did you know that this gentleman was going to be a good mentor for you? And how did you take that leap of faith with him? Because you're essentially turning yourself over and saying,
right,
teach me, I'm here to learn. How did you know he was the right guy?
Yeah, so a lot of that is just due to the fact that we were neighbors and family friends. So he was the same guy. He used to drive me to school in middle school.
Oh, you're kidding
so,
me?
Yeah,
you've known him for years.
Known him for years, yeah. So he used to drive us to middle school. My brother was in the same grade as one of his kids, so they grew up playing sports and all that good stuff. And just, had known him for years, and he had become a family friend. He, insured
super cool.
He insured my parents, and, so he was just someone I could trust and someone we knew was a good dude in the community and all that good stuff. And so
that had to give your parents a lot of reassurance too, to know that you're coming under the wing of somebody that they have known for a long time.
Yep. Absolutely.
And have entrusted really the care of their kids with bringing you to school and all those kinds of things, right? So that had to be very reassuring for both of you guys.
Yep, absolutely. And so, my parents thought it was a good opportunity for me. And one of the big things, like you said, it was a little bit of a leap of faith, because getting into insurance, as you have probably heard and know, you don't make a lot of money your first couple of years, especially when you're working for other people. It's generally a low salary and then mostly commission. So, I had some
opportunities. Few and far between when you have no customers.
Right. When you have nothing to go off, like you literally start with 0.
Right. And so I'm going to answer the phone. The phone's ringing. You're like, I might have somebody. Give me that.
Yep, exactly. And so it is a little bit of a leap of faith, because, I took this opportunity ahead of other opportunities that I had, which would have paid, a flat base salary and would have made more money probably my first or second year. But I just, I thought he was a great guy who was going to mentor me and get me to that next level.
What did you see in that opportunity? Because I think that's something that a lot of our listeners are facing too, is like the what appears to be the sure path of W-2 employment and working for a big company and immediately getting paid and having immediate benefits and having the time off built in. And yet here you are saying, I'm going to take a risk with a guy, although I know him, he's my neighbor, but in an industry that is unknown, and bet on yourself.
Yeah, I mean, a lot of that was just, I had just a fascination in college with money and with, 1099 versus W-2 income. Like I knew the advantages to being a 1099, to being a business owner. And so I knew going that route was going to be beneficial for me long term. So that definitely
Even though short term.
Yeah. Even though short term.
There were trade-offs?
Yeah, for sure. Like short term, I definitely sacrificed a lot as far as, like you said, the benefits. So
give us some perspective. What would you have earned? Because I've been out of college for a long time. I don't know what a starting salary would be for a job like what you would have gotten. What would you have earned? And you started, I'm guessing, 100% commission or very little salary.
Yeah.
So give us a quick contrast on that trade-off in terms of dollars.
Well, I'll just be straight up with what I made versus what around the opportunities I was turning down. So had an opportunity to make roughly $50,000 out of college, which is, that's probably pretty average. I'd say nowadays is 40 to 50 is probably average out of college, and turned that down to go the insurance route where I had a base salary of $1,800 a month. Yeah, came out to about.
You were rolling in it, man.
Yeah, I was rolling it out. I was living in my parents' basement. I was making $1,800 a month salary, and the only time I would make more than that is if I sold something, right? Yeah. And then I got paid a commission on top of that. But I can tell you, I did not make $50,000 my first year.
Well, it's less than half that. It's like less than 24,000.
Yeah,
grand to be 24. So that's a pittance of what you would have made. So to be able to, I think it's interesting how you valued education, mentorship, guidance from somebody who's been down the path, a tried and true experienced professional that you knew and trusted, over what you would perceive to be, and many others would perceive to be, this sure deal.
Right.
In working for a corporation with all the benefits and again the time off.
Yep.
So that's a huge credit to you to bet on yourself. And I think that's a big reason I asked you to come on, honestly, because we serve entrepreneurs in our community, and we are big on mentorship. We're big on coaching and teaching and leveling up people. And I think it has to start with that spark. And for you to see that spark in yourself and trust in it is a huge credit to you.
Yeah, absolutely. And it's and we've talked about this a lot, and I was a part of like I said, in that NAFA group, we took a leadership class, and it is a lot of insurance and financial advisors. And one of the topics that kept coming up is, I'm in this class and I'm 25 years old at the time. Everyone else is 45, 50.
Yep.
And they're like, why is nobody young getting into this business anymore?
Yeah.
And it's for that exact reason. It's because, it takes someone who has to have a good idea of, the difference between 1099 income and W-2. They have to be financially smart and know what they're doing. And then, of course, they have to take that same leap of faith, and it's not easy. You have to put in the elbow sweat, the elbow grease for a couple of years just to learn, really, is the main thing.
It's funny. I've heard it said that entrepreneurs are the only ones that'll work 80 hours a week so that they can avoid working 40 hours a week.
Yeah.
Like I want to work for myself, and I'll work double.
Yeah.
But it's for me instead of working for somebody else. Let's go to, you brought up something else I thought was interesting. The networking and the you said you learned about the shelter opportunity through a networking event, or maybe not an event, but through some connection you had made. And I think so many times people, as they're venturing out on their own, there's this challenge of saying, and maybe it starts with just a narrative, right? Of like, I don't belong in this room. I'm 25. These guys are all 45 and 50. I'm brand new. They're all experienced. What value can I bring? And you sort of have this, maybe it's imposter syndrome, or maybe it's fear. I'm not sure what it would be. But that could cause a lot of people to draw back and isolate and say, I'm not going to put myself out there.
Right.
How did you overcome that? And then talk a little bit more about the fruit that came specifically about the shelter opportunity. Yeah.
So again, back to the mentor side of things, right? It all kind of leads back to him. He was the one so he originally, little backstory on him, moved to Omaha from Seattle. So he knew not a single soul when he moved here. And he started just right away as an agent with Farm Bureau. And so that's how he essentially grew his businesses. He did marketing. He did joined a bunch of networking groups, started a bunch of networking groups, literally was going out, delivering cookies to businesses type of deal. And so I did all the same stuff because he showed me the ropes and was like, this is what I did. This is what you're going to do.
Here's the playbook, copy it if you want to get the same results.
Exactly. So that's how I started off. I was buying, 5 dozen Eileen's cookies every Tuesday, Thursday, and I was stopping into banks, talking to real estate agents, talking to loan officers.
I'm surprised you're not 300 pounds.
I know. Well,
Eileen's cookies are dangerous.
Funny story about that is I would never eat them, right? I would buy them and give them out, and they always smelled so good. And so I was always like, oh man, I love Eileen's cookies.
Yeah,
but
don't break the cellophane. Otherwise it's game over.
Yeah. No, it's bad. But yeah, so that's how I got started really is I met a lot of loan officers that way. And just built connections with them. We would get coffees, we would go golfing and things like that, and just grow my relationship with them. And then again, keep in mind, I'm 23. At this time, I'm probably 22, and most of them are, 40. Yeah, 40s at least.
How did you overcome, Or let me ask a different question. Did you ever feel like you were out of place?
Absolutely.
And so that if that's
Yeah.
true, then how did you continue to step out in courage? Because it's tricky when you
Yeah.
continue to feel out of place to continue to push through that and
Yeah.
still act in courage.
Yeah, it is. It is tough. Like you said, I felt out of place every time I would do that. I would feel, I'm walking into a bank and I'm like just a kid with cookies. Like, hey,
Anybody have milk?
yeah. And I'm literally like, hey, I do home and auto insurance. I'd love to quote your stuff type of deal, like just talking to people.
Yeah.
And, so you get used to that rejection. And so, yeah, the first couple of years, like I said, it's just tough. It's just a matter of getting out there, building those connections. You take a lot of no's. You get your teeth kicked in a lot. And that's what I did. And so I just got myself out there and kept going, kept staying consistent and dropping into these places and just trying my best, really. It was just a matter of consistency because I had this mentor telling me, dude, it's going to pay off for you.
Yeah.
You just got to stay on top of it. Like you can't just skip it. Like you can't
Don't quit on yourself.
Right.
Because you're on the right path.
Right.
And having that encouragement and that reassurance, I imagine, helped
keep
absolutely
you going. That was the only thing that helped keep me going, really, is just looking at this guy as an example. And I'm like, all right, well, if I want to get to anywhere close to where he's at, he's not lying to me. He did the same
cares.
stuff.
He wants me to be successful.
Yeah, exactly. And so that's what I did. And one thing led to another. I ended up joining, NAFA, which is the insurance group here in town. And he was the one that told me about that program. So I joined them. They have a young advisor team, which is for agents who have been in the business 8 years or less. So joined that young advisor team, started getting involved in that, met a lot of people through there, and just met a lot of people through NAFA in general. And then ended up starting my own networking group. We actually called it Business and Beers.
Oh, nice.
Which is kind of funny. Yeah, so we'd meet.
You graduated from cookies.
Yeah, I graduated from cookies to happy hour at the Green Onion.
There you go. There you go. Talk about an old school place to have happy hour.
Oh yeah.
Jeez.
Pull tab Wednesdays, man. That's what we do once a month on Wednesdays. And we would go there and
those traditions matter though.
They do. Yeah. And just staying on top of it. And so staying consistent again with the networking groups are what I found to be key. Because originally when I started that group, we tried to do it like a once per week thing.
Yeah.
And we quickly realized, hey, if we do this every week, people are going to get burnt out. They're going to stop coming. We want it to be important. We want it to be beneficial for everyone. And so we ended up changing it to once a month because now that way, everyone kind of looks forward to it. Everyone kind of looks forward to it once a month.
Sure.
We're happy to be there, spend a couple hours, talk business with each other.
It's good to catch up at that point.
Yeah.
You haven't seen each other for a minute.
Right. Haven't seen each other. And the way I started that group too, it's a bunch of people from bunch of different industries. So, I'm the insurance agent. We have a commercial insurance agent. We have a real estate agent. We have a loan officer. We have all sort of financial advisor, health insurance, all that kind of stuff. And so we specifically made it that way to where we could all, mutually benefit each other.
Of course, instead of competing,
right?
And having that scarcity mindset creep in, you show up and you can provide a lead to somebody and know that they're going to benefit. It doesn't hurt you.
Exactly. Like we're all not competing. We're all around the same. We're all young guys, 25 to 30 probably in the group. And we show up and just have a good time. And I've just been growing those relationships ever since. And it's been great. So we hang out all the time now and do events and things like that.
Let's dig into insurance. You guys, this is the reason I asked Grant to be on, because if you think about, there's a lot of insurance agents. There's a lot of people who can provide this coverage. And you want to have somebody who knows you and understands you. And because our audience is young entrepreneurs and people aspiring in business and building their own businesses, you want somebody that understands the struggle and the challenges related to building a business, not just product pushers, right? Mm-hmm. And Grant, somebody, if you've heard some of his story, he can relate to you on your journey, and somebody that can empathize and understand the stress of trying to build a business. And so I think that from that context, he can just provide better service, better opportunities to connect. And so I'm just really delighted. Let's dig in a little bit on the insurance side. So if we're talking about the practical, insurance that's critical for protecting both personal investment and investment assets, where does somebody even start? Because you're talking about life, you're talking about, and I know I don't think you do health, right?
Nope, don't do health.
So you have that to consider. You have all kinds of accident insurance and other policies, and then you have car insurance and home insurance and business and all this stuff. So where does somebody start? Like the the foundation level of insurance?
I mean, foundation level, I would say, is probably starting with the home and the auto side. So whether it's renter's insurance, the most basic policies I generally will see are like a renter's insurance and an auto only policy. And whether they're renting an apartment or still living with their parents, the renter's insurance is kind of a good place to start as far as getting personal liability in place to cover you.
So what does that do for those that maybe are renting and don't have renter's insurance? Why do they need it?
Yeah, so the biggest, there's really two main aspects to the renter's insurance. Okay, so number one is going to be it covers your personal property. So let's say you have $20,000 in personal property coverage and you're renting an apartment and it burns down. Well, then you would essentially get $20,000 to replace your clothes, your furniture, your appliances. So if you don't have that at all and your apartment burns down, you're just left with nothing.
Your personal belongings are gone.
They're gone. Everything's gone. You're going to have to buy, all new clothes, all new furniture, all new appliances. You're getting nothing back. You're starting over. It's going to cost you thousands of dollars. So that's number one. Number two, and what I think is probably the most important part of renter's insurance, is the liability side.
Okay.
So it's going to cover your personal liability, in which case the biggest thing for that is same situation. Say you're renting an apartment. Well, let's say you're found liable for burning half the building down. Yep. Well, if you're living in a $5 million building, you're going to get sued.
It's a big check.
You're going to get sued.
Yeah,
and so the liability insurance at least helps cover you in a situation like that. That personal liability would kick in and cover you for the damages that you were found liable for causing, right? And so in the same situation, if you don't have renter's insurance and, you burn down a floor or you burn down just your room, that's going to cost a lot of money and you're going to get sued. And if you don't have that liability insurance in place, well, then most likely what happens is they just take you to court and you'll have your wages garnished until they make their money back.
That sounds terrible.
Yeah, and that's not what anyone wants to do.
I just tried to live in an apartment. I wasn't trying to pay for the place.
Yeah, and so I can promise you most people, it will happen. Insurance companies will get their money back one way or another in that situation, and that's why it's super important, because if you don't have that in place, you'll get sued for any sort of asset you own and you'll have your wages garnished until it's back.
So moral of the story, if you're renting, get renter's insurance.
Yeah,
right?
it's $100 a year.
Yeah,
generally.
It's super cheap.
Yeah,
super cheap. So talk about the difference. Some of the folks that listen to us, or a lot of them, are investors. Mm-hmm. So talk about the difference in how they should be looking at personal insurance coverages versus coverage for their investments.
Yeah, so the biggest difference there would just be two different types of policies, right? Like you have your personal policies for, your main home and your autos, and then the investments,
the ones you live in, and your personal car.
Yeah. Yep, the ones you live in your personal car. So that's going to be on kind of the personal side, and then any sort of assets, whether it's rental properties or apartment buildings, are going to be on some form of, at least with us at Shelter, it's a commercial policy most of the time, and so that separates it. They're just written differently, obviously, because one is a house that you're living in, which would be a homeowner's policy, which that comes with, personal property coverage, personal liability coverage.
I'm sorry to interrupt.
Yeah.
Just to help us understand the delineation, is there a point at which is it I live in the place, so therefore it's personal? Mm-hmm. So if let's say, for example, I live in a fourplex and I'm house hacking. Yeah. Because there's some folks that do house hacking. They buy a duplex, they live on one side, or they buy a fourplex. They're still, by lending standards, considered single family. Mm-hmm. Is that true on the insurance side, or how does that? Yeah,
so I actually just dealt with this like 2 weeks ago. I had a guy who was house hacking in a duplex, living in one side, renting the other side out. And the way we do it, with Shelter at least, is we classify it as a homeowner's policy. Okay. And we just list that it's 2 units. And so the main thing with that is we just have to run a rebuild. We run rebuild calculators on all properties. That's how we come up with the valuation on, hey, if this property were to burn down, it's going to cost roughly this much to rebuild. And so when we're running that rebuild calculator, we just plug in details of the dwelling. So we plug in that it's 2 units. We have to account for all the square footage, all the different bathrooms, the basements, the 2 decks, all that kind of stuff. So that's where we get that valuation. And then we were able to classify it as just a normal homeowner's policy. Whereas,
and I'm guessing that's less expensive?
Yes. Yep.
Than
generally, yes. I would say generally, yes. Yep. So If he wasn't living in that, it would be with us. It would be just like a landlord dwelling policy.
Yeah.
And like you said, it's generally a little bit more expensive.
So walk us through the process. Is it different insuring a investment property than a personal property, or is the process the same with you?
It's really the same.
Okay.
It's really the same. The only difference is, you check a box that it's a rental property, and it's not, the owner's not living there. It's a rental property, and
so it's not a big, complex, hard difference. It's you can come in and say, hey, I want to insure the property, and you're saying, are you living in it or is it an investment? And that's really the difference as far as the process goes.
That's really and then just the type of form, because if it's like a rental property, for example, doesn't come with personal property coverage, because why would it? The owner's not living there, the owner's not going to pay for the tenant's property,
right?
So that's why the tenant needs to get renter's insurance, is for their own property if it were to burn down.
It makes total sense.
Yep.
Yeah, and I think that oftentimes that gets lost.
Mm-hmm.
We have a property management company, and we have several hundred tenants, and our requirement is that every tenant gets renter's insurance for that reason.
Yep,
because we want to make sure that they're covered and protected. There is some protection for us as well.
The liability side, right?
Yeah, absolutely. So we require it just because if we have a no smoking policy, but some people still choose to smoke in the property.
Oh, yeah.
They fall asleep and their cigarette burns their chair and whatever, smoke damage even. So yeah, highly recommend that. Let's switch a little bit and talk about adequate coverage. So this is something that I've personally struggled with, and trying to figure out how much. So let me take a step back. On an investment property, my biggest concern is if the property burns down or if a tornado takes it, and if I have a mortgage on it, that I'm not coming out of pocket to pay that mortgage. So if a property is worth, let's say it's worth $200,000 and I have a $100,000 mortgage on it, how should I be thinking about the insurance? Because if I could theoretically insure it for $100,000 and underinsure the house and reduce the premium, but how would you advise me to look at that from an investor standpoint? Because I think so many of us think we're trying to, especially on a rental, the cash flow is so small. Like we're trying to cut corners everywhere we can. So let's talk about adequate coverage and help me think differently or educate me on how I should be thinking about adequate coverage on an investment property.
So that example is definitely really interesting because a lot of it is just up to the investor, right? Like, so we as agents are obviously going to recommend that you insure the property to its rebuild value. So, if it's $200,000 property to rebuild, we think you should insure it for that much, but that doesn't mean you have to. So there's kind of two different things here, because when we're insuring a property for less than the rebuild value, you actually can't have replacement costs on it. Like there's not a company that's going to insure a $200,000 property at a full replacement cost for only $100,000. They won't do that. So
pause for a second and explain the difference between replacement cost and actual cash value.
Yeah, so that's a great question. And this is probably one of the biggest I dealt with this today, actually. It's a big misconception in insurance, one of them at least, where a lot of people just don't know the difference.
Right.
And we see this all the time with, just a standard homeowner's policy. But the biggest difference is replacement cost. Say you have a 5-year-old roof and you get hit by hail and your roof is totaled and you need a new roof. Well, what they'll do is then they'll get out there and you'll get a bid from a roofing company. They'll say, all right, it's $30,000 to put this new roof on. The insurance company will say, all right, great, it's approved. Here's $30,000, put their new roof on. Easy peasy.
That's with which type of coverage?
That's with replacement costs.
With replacement costs. So it sounds like to me, whatever the bid is from the contractor, the insurance company will agree to pay that as long as the contractor's legitimate, I guess.
So they'll send the insurance company will send an adjuster out there who will do their own estimate, and as long as it's
it jives, and they're going to pay it.
Yeah, as long as it's reasonable, they'll be like, all right, here you go. They obviously subtract the deductible out of that, and then they pay whatever the cost is.
So if it's $30,000 repairs, it's replacement cost. You have a $5,000 deductible. You're going to get a check for $25,000 to pay the contractor to do it.
Yep. Okay. And then the other $5,000 comes from you.
Makes sense.
Exactly. So
or you negotiate with the contractor.
Yeah, or you negotiate, and a lot of people do that. A lot of contractors will try to pay deductibles and things like that, which is technically illegal, but it happens. So
We don't advise that you do that.
Yeah, we don't advise that you do
disclaimer.
that. Yeah, full disclaimer. It's very illegal. Insurance companies obviously hate that.
Yeah.
But pivoting over to actual cash value. So actual cash value is always less expensive than a replacement cost policy, but it's because you're getting far worse coverage.
So use the same example, same roof.
So same example, same roof, 5-year-old roof gets totaled by hail. You need a new roof. What happens then is the adjuster is going to come out there and they're going to take a look at the roof and they're going to depreciate it out 5 years. So they're going to say, okay, this roof cost $30,000 to put on brand new. However, it's 5 years old. Therefore, we're going to subtract 5 years out of that roof. So we're only going to give you a check for, $20,000. So
because it's had 5 years of use.
Because it's had 5 years of use. So therefore, it's not worth the same as a brand new roof. And so they depreciate it. There's a depreciating schedule. Every company has their own kind of different depreciating schedule. But long story short, each year your roof gets older. Not even just your roof, your whole house. If you have an actual cash value on the house, each year it gets older. Each year the materials get older.
So all the materials have a life expectancy is what you're saying.
Yep.
And as they age out, even if you maintain the house, right?
Yep. Even if you maintain the house, they're getting older and, in theory, the materials aren't worth what they were.
It's deteriorating.
Yeah.
Yeah, it makes sense.
Yeah, it's deteriorating. So therefore the insurance company is not going to pay for a brand new roof when it's a 5-year-old roof. So then they take that depreciation out on top of your deductible, and then they'll give you a check for whatever it may be.
So if it's $30,000, they have a depreciation of, call it $5,000, so they're at 25, and they have a deductible of 5.
Yep. Then they give
so
you
now
20.
they're going to get 20.
Yep.
And the roof could cost 30.
Yep. So now you're out $10,000 instead of 5, and that's just a rough example. The tough part with actual cash value is you never really know what until the adjuster gets out there.
Right.
You can't be like, oh, okay, I'm gonna get this much exactly for my roof, because it all kind of depends on what the adjuster sees, what they think the damage is, how good they think the material, how good of shape it was in.
Do you have a sense of the savings between a replacement cost? So for the same policy, let's say it's a $200,000 house and you get replacement cost insurance versus a $200,000 house and you get actual cash value. Do you have a sense of what that premium difference would be?
It's not as much as you would think, really? Is what I would say to that. Roughly $300 to $400 a year difference.
Okay.
Maybe.
As a percentage, what would you say? Is that 10%? Is that 20% less?
Yeah, I'd say somewhere in between 10 to 20%. I would say difference in premium, and to me, it's always far worth it to have the replacement cost. I mean, but again, it depends, because if you're an investor and you've got 50 plus properties, well, if you do the quick math on how much it would save you each year to save 20% on each house, it may make sense to go actual cash. And so that's what I was getting at, is in those big portfolios, I'll see that. And I do that with certain investors, because it all just kind of depends on the scale that you're at and how big your business is. Because a lot of people do prefer to say, hey, I only have 100,000 on loan. I only want 100,000 in coverage on this.
Right.
It doesn't make sense for me to pay all these properties for, the full value.
It's interesting.
Kind of self-insure a little bit.
Yeah, I was just going to say that's kind of our approach, is we have insurance to cover the mortgage, and depending upon the value of the house and how close that is to the mortgage amount, we might increase that above the mortgage amount a little bit. The reason we do that is because we also own a construction company. And so we're able to do the repairs at cost.
Okay.
And so let's say, for example, it's a $30,000 roof repair, retail, and our actual cash value claim is after depreciation, after deductible, ends up being 20.
Yep.
We might still be able to do the work for 20.
Yep.
Because we have a construction company.
And that makes perfect sense. It's like, why wouldn't you do it that
So
way?
then we want to save the premium.
Right.
But when you have we've had, in the last year, Grant, we probably had 15, 20 claims because of the storms that went through.
Yep.
And some of them we didn't get much at all, and we're coming out of pocket.
Okay.
So this has sort of been learning. Some of them we did okay on, and some of them we didn't, right? So now we're realizing the risk we're taking, and either the benefit or the downside, depending upon the property, of how that turned out for us, because the actual claims have come through on these. So it's always an interesting conversation to have, and it's not like there's a right or a wrong.
Right.
Is that a fair thing to say?
Yeah.
It's
Oh,
just
absolutely.
evaluating it for your situation.
And all insurance is, and the fundamentals of insurance is simply the transfer of risk, right? So like by paying us to cover more, you're simply giving us your risk.
More risk.
Right.
That's a good way to look at it.
That's all insurance is.
If we want to shoulder more risk,
then you pay
it's
less.
up to us, and we pay. Yeah, it makes sense.
And if you want to pay more, then we take your risk, and therefore you don't have as much risk. So yeah, it is interesting. I always think and again, that's one of my favorite parts about what I do is just working with, different folks, because I'll run into huge portfolios and I'll sit down with them and be like, all right, well, what's going to make sense? This would probably make more sense for you versus a guy like me who's got 3 rental properties. Like I want replacement costs.
Because if you have a significant loss, it could be catastrophic financially.
Right.
So one of the things that as business owners, we have exposure to beyond just the actual properties that we own ourselves relates to liability. And I think that's oftentimes misunderstood, and people don't really understand, what that is and why they need it. So would you mind explaining, first of all, what is liability? Like what are the liabilities that business owners have, and why would they need coverage for it?
Yeah. So the biggest thing, especially when we're talking about, real estate investing and owning properties, multiple properties, when we're talking about the liability side of things, that's going to be, things like, as a landlord, things you would be liable for. So maybe you have a hand railing that's loose and your tenant put in a complaint about it a week ago, and they try to grab that hand railing and it falls off and they fall down the stairs and break their neck. They can sue you for that. So as a landlord, that's a huge liability risk to you, and that's the whole point of carrying that liability insurance. As well as maybe the sidewalk's not shoveled in the winter and the mailman's walking by and slips and falls, breaks his neck. You as the owner of the property again can still be sued for that or brought into court for that.
That's 2 broken necks.
Yeah, that's 2 broken necks.
It's not good.
It doesn't happen every day, but it does happen.
Right.
And people, unfortunately, nowadays are sue happy, right? And
Yeah,
so
they're litigious for sure.
Yeah, a lot of people, I wouldn't be surprised if there's people out there that specifically look for unshoveled driveways so that they can go slip and fall on it. And
that's a sad statement, but I think it's probably true.
It is true. And so as a landlord, those are things you need to make sure you're protected for.
Is that at the property level where you're saying, I'm going to have liability at this property and pay for coverage for that property alone? Or how do you view that? How should we be looking at it as investors?
Yeah. So there's the way I generally set those properties up insurance wise is because you can do it one of 2 ways. You can have individual liability per each location, each premise, which would cover each location, or you can have just kind of an overlying general liability or umbrella policy that covers, a portfolio of rentals. So you can do it, for even 2 rentals. You can just have one policy that covers the liability on both of them. And so that's the way I tend to go, just because you can, generally speaking, get a lot more coverage for a lot less of a price. When we're talking putting liability on each separate location, it generally costs more for roughly the same coverage.
Gotcha.
So,
it sounds to me like an umbrella is a less expensive way to get coverage across multiple assets.
Yes.
And still have adequate coverage.
Right. Because you can go anywhere you can go up to a 5 million, 10 million umbrella in some cases, based on portfolio size. And so in most big portfolio cases, that's the route to go. But even, if you have a couple properties, you can still have a $1 million or $2 million umbrella and might only cost you a couple $100 a year to insure the landlord liability side of things. And so that is a huge thing of what to look out for when you're looking into your insurance policy, because if you only have, $300,000 in liability per property, and all these properties are insured into the same LLC, well, if something happens liability wise, they can sue that LLC, which would be your
exposure to the other properties in there.
And they can come after the, the cash value and things like that, or those other assets that are tied to that same LLC. So that is probably the single biggest thing to look out for as a real estate.
If we have homeowners insurance on each property, is there built-in liability?
Yes.
Or is that, do we have to have an umbrella?
So every homeowner's policy has built-in liability, but you add an umbrella to essentially, I like to call an umbrella on the personal side of things. I like to call it a sleep well at night policy.
Okay.
So say you have, your main home, 3 cars and an umbrella. Well, that $1 million umbrella is going to extend on top of your homeowner's liability. So if you have $500,000 in homeowner's liability, if you got that umbrella, you'd be at $1.5 million instead.
So they add up.
Yep. So essentially the umbrella kicks in once the homeowner's liability limits have been exhausted.
That makes sense.
Yep. Then that umbrella comes in and protects you from the rest. So as an investor, you have to keep an eye out on, what is your net worth? So that's what I always ask people when we're talking about umbrellas and investors with multiple properties, because, if their net worth is 20 million, well, it would probably make sense to have around a $20 million general liability policy or umbrella policy, because if something tragic does happen at one of those properties, the last thing you want is to be sued for, everything. So
yeah, take some of that exposure off the table.
Yeah. So again, you got to keep an eye out for that. Obviously a $20 million umbrella is probably not going to be as expensive as a $1 million umbrella, but
right.
You got to take those precautions. Again, insurance is just the transfer of risk, and it's up to you at that point. Maybe you want a $10 million umbrella and you'll kind of take the risk on the other 10 million. It's kind of up to the investor at that point. You can weigh the difference in premiums, but that is the whole point of an umbrella or general liability policy for you.
Well, and it sounds to me like the liability that comes with the policy on the homeowner's insurance is going to lack the amount, maybe I should say, of coverage that you're going to probably want, especially if you have multiple properties. And
here's another thing too, is most people's home is insured in their personal name, or it's titled in their personal name, and then they'll have investment properties in their LLC name. So those are, 2 different entities. So you got to make sure to separate the entities out for legal reasons and liability reasons. And that's why if you have an umbrella on your personal stuff, that doesn't cover your rental properties if it's in an LLC. Yeah. There's a division there between personal and LLC. Most of the time, yes. At least that's how we structure it with Shelter, is we would essentially write a general liability policy, one in the LLC name, and then you would have your personal umbrella in your personal name. But you can also set it up. You can set an umbrella policy up to extend to your rental properties. It just generally, I just write a completely separate general liability policy, which works as, an umbrella almost for all those separate locations. So getting in there and talking to you about the situation and having you understand what it is, you can provide the guidance they need. Yeah, absolutely. Yeah. Awesome. It's all tailored towards, the investor and the situation and how much risk they want to take on. And some people maybe just want $1 million of liability insurance. Maybe they're going to say, hey, I'm never going to deal with a liability claim in my life. Right. Never heard of it. I'm willing to take that risk. That's totally fine. But at least be, you're helping them make an educated decision at that point. Yeah. At least be informed of the risk that you're taking on. Right. Makes sense. Definitely an important thing there. So can you give us, speaking to our listeners, one actionable step that they can take to either evaluate or improve their insurance situation? Yeah, I mean, most of all, for me to say, I would always recommend just getting with your agent, whoever your agent is, whether it's a broker or a captive agent. The best step is just for you to sit with them. Every agent would love to spend 30, 45 an hour with you and just go through your policies. That's our job, is to sit down and make sure you're properly covered. Because the last thing we want is, for something to happen, you to not have enough insurance, because then guess who gets yelled at? The agent. Right. And so that is something I actually do deal with time to time, is I'll have the notes. I do policy reviews with my insureds, and I reach out to them once a year to try to offer those policy reviews. Well, some people take advantage of it and come in, we go through all their policies. I explain coverages, liability limits, deductibles, all the good stuff. They get a good idea. I'll make recommendations to them. Hey, I think you should bump your liability. I think you should add an umbrella policy, and here's why. And then, I let them make the decision. But then there'll be others that they just say, no, you know what, I'm good. I think all my policies are fine. And it'll be someone I inherited, right? So I didn't write the business.
Right. And you feel like there's probably some risk there that you can't mitigate because they won't sit down and talk to you.
Exactly. And so that's where it gets a little dicey sometimes, because then I obviously didn't write it. There's things when I'm looking at the policy, I'll make recommendations for them even over the phone, but generally speaking, they don't want to pay more, right?
Yeah.
They don't want to pay an extra $10 a month for higher liability limits, because why would they?
Right.
They don't know any different. And so I have run into that a couple times where, I'll try to have a review with someone. They turn me down. I'll take a note. Hey, they denied my policy review. 6 months later, they get into an accident. They don't have roadside assistance, whatever it is. And then they come yelling at me, hey, they're not paying for my rental car. And I'm like, well, dude, I tried to talk with you and go over all your policies.
That's still, even though you have that note and even though you attempted, it still doesn't feel great to get that call.
No, never. Because, you feel like you could have done more for them, or you could have helped them in some way, shape, or form. And that's the importance of having those policy reviews. So what I would say to take that next step, and whether you have a huge portfolio of rental properties or whether you have, a home and a couple cars, just meet with your agent, get together with them, make sure you have the proper liability coverage on their vehicles, make sure you have the proper liability coverage on your property, and kind of go from there. So
how often should that occur in your opinion, or how often do you do it in your business?
I do it once a year. I think once a year is more than enough for sure. Some people, I always like to at least offer it once a month. Some people say, hey, you know what, we met last year, I'll pass this year. And that's totally fine, because at least I met with them, we're in agreement on what their coverages are and things like that. But I think getting together once a year is a great step. For sure. I mean, it's like I said, it's a 30-minute meeting, 40-minute meeting tops. You and, if you're married, you and your wife pop in, take 40 minutes and just go through your policies. It's really that easy. So
yeah, well, it sounds painless and simple. What do we do if maybe some of the folks listening have an agent that doesn't quite give them the level of care that you do, and they're looking to maybe make a change or get in a second opinion on their coverage? Is that something that you offer, or what do you recommend that they do?
Well, if you're not getting a hold of your agent, that's probably just not great. Like, you're going to want to get a hold of somebody in the office, whether it's some form of secretary or agent. But yeah, like you said, that's a huge part of what we run into every day, is just there's people that unfortunately don't get a hold of their agents. There's a lot of old getting ready to retire agents that are, they just simply don't work anymore, or they don't work as much as they used to. And that's just the unfortunate truth of it. And so if you're unhappy with your service and, you're trying to reach out to your agent and trying to get second opinions and things like that, and you can't get a hold of them, then you may want to consider just reaching out elsewhere and trying to get quotes and talk to someone else. Because, a guy like me who's young and trying to grow the business and things like that, I'd love to sit down with anyone and talk to them. Whereas a lot of agents out there are just kind of, they've built up their business and they're on autopilot. They're relaxing, and they're not trying to run those reviews like they maybe once did. So that's what I would say on that. Find a second opinion somewhere, because there's definitely agents out there that will meet with you. So.
Well, and we've talked that, insurance isn't just about protecting what you have. It's about ensuring that your hard work and investments are secure no matter what life throws at you, right? So it's important to be able to think through all aspects of insurance, auto, home, or life, and having that peace of mind that you can provide. So where can listeners find you, and what's the best way to learn about other insurance options or to review policies if they have an interest in doing that with you?
Yeah, best place to find me is probably just online. I have a website, the Grant Wilbeck Shelter Insurance website. If you look up Grant Wilbeck Omaha, I should show up on the shelter.
We'll put it in our show notes as well, so people have a link to it.
Yep, we'll put it in there. And my office number, 402-339-3765, is generally where I've got an employee now, Trevor. He started with me in October, and so
he's your Grant.
Yeah, he's my mini me right now.
There you go.
I'm trying to I kept saying I'm trying to duplicate myself and him, and little bit of like a different pay structure and things like that than when I started with Farm Bureau. He's making a higher salary, and it's kind of more of a team effort where, whatever the agency kind of grows on, he kind of gets paid on that.
That's great. So he's
yeah.
incentivized to not just build his own book, but
Right.
to build the overall business.
Right. He's incentivized that, if he succeeds, I succeed. And if I succeed, he succeeds.
I love
that. I've been loving it so far. He's been great. He's putting in the work just like I shortly was 2-3 years ago.
Yep.
And he, just got his business cards in the mail. So guess what he's going to be doing soon?
That's great.
He's going to be dropping off Eileen's cookies and talking to people. So
you're handing him the same playbook.
Exactly. So if anyone sees a Trevor West coming in with some Eileen's cookies to your building, you know what it's for. So
but give the credit to your Farm Bureau guy.
Yeah, exactly. Give the credit to it's all to Jason. So, but yeah, no, office number, me or Trevor will be there to take care of you, and would love to connect. So,
okay. Well, I want to thank everyone for participating with us today. Thank you, Grant, for coming in and sharing all the knowledge.
Yeah, absolutely.
It's been great. I appreciate the fact that he's not only a business owner, or not only insurance guy, but he's a business owner and a builder. And any entrepreneur that reaches out to him is going to find value and benefit. So until next time, we'll see you on the Legacy Lab podcast. Thank you.
Absolutely. Thanks for having me, Mike. Appreciate it. It was a good time.
It was great. Good.